Welcome back to Investing Talk Podcast.
Glad to be here.
Today, we're going to dive into SAG Holdings.
SAG.
You sent over some info on them, and it's pretty interesting.
Yeah, it is a Singapore-based company. They distribute automotive and industrial spare parts.
So we're talking like two main segments here, on highway, off highway.
Breaking a lot of ground: automotive, marine, energy, mining, agriculture, construction, you name it.
And that's what I wanted to ask you about, like what jumps out at you when you see a company with that kind of reach?
I think the first thing is the potential, if one sector kind of takes a dip, maybe the others can hold it up.
Makes sense.
But then there's the flip side, right? Managing all those different supply chains, the different customer needs.
Right. It makes you wonder how they can really juggle all of that effectively.
It does.
But let's talk stock price, because this is where things get really interesting to me.
Oh, yeah, this is a wild one.
It's a roller coaster. We hit a high of $8.27 back in October 2024, then all the way down to 46.83 cents in March 2025.
Ooh.
That's a huge drop over the last year.
It is.
We're talking an 88% decline year to date, around 75%.
75% down.
Although we did see a little jump on March 14th, 2025, 5.32%.
Little blip.
But what does that kind of volatility tell us about how the market is viewing this company right now?
Well, I think it speaks to a lot of uncertainty. The market's trying to figure out what to make of SAG. That massive drop suggests serious concerns maybe about their future or just the industries they're in.
Right.
Those little upticks, they could be anything, news reactions, speculative trading, who knows.
Right.
But that downward trend, that's the real story here.
So let's add another layer to this. SAG has a market capitalization of about $6 million.
That's relatively small.
Very small.
Yeah.
How does that smaller market cap usually influence the way a stock behaves?
Well, think about it. Fewer shares floating around, less trading volume overall, so even small trades can have a big impact.
So it amplifies those swings.
Exactly. It can make things really jumpy.
And I imagine it makes it tougher for investors to get in or out without affecting the price.
Yeah. Liquidity can be a real challenge in these situations.
Now let's look at the financial picture over the last 12 months.
Okay.
SAG reported about $59.52 million in revenue.
Okay.
And $1.63 million in net income.
So they're making money.
Yeah, their trailing 12 months earnings per share is 21 cents.
21 cents a share.
How do those numbers line up with that drastic drop in stock price? It seems like they're still bringing in revenue. They're still turning a profit.
It's true. They are generating revenue and they are profitable. But that stock price that's telling us the market sees something else.
They're worried.
They're worried there are concerns somewhere, maybe future growth, maybe rising costs, eating into those profits.
Or maybe the market just doesn't believe those earnings are going to last.
It's possible. Sometimes a low price to earnings ratio can look tempting.
Right. It can make you think it's a bargain.
But in this case, it could be a red flag. The market's not convinced those earnings are sustainable.
So what are they so worried about?
That's the million-dollar question, isn't it?
It is. So let's shift gears a little bit and look at the technical analysis.
Okay.
What's it telling us?
Well, it's pointing towards a bearish trend.
Okay.
The stock price, it's below both its 50-day and 200-day moving averages.
So both short-term and long-term indicators are negative.
Yeah, and the relative strength index is hovering around 40.
So not quite oversold yet.
No, but definitely facing some downward pressure.
What does this technical picture add to our understanding of SAG?
It kind of confirms what we're seeing in the price action. The stock is struggling.
Right.
Being below both those moving averages isn't just a small blip. It suggests a longer-term downward trend. And that RSI of 40 means there's still selling pressure out there. Not a lot of buyers stepping in.
So for an investor looking at this company right now, what's the takeaway?
Well, it depends on your risk tolerance. Someone who's comfortable with high risk, they might see opportunity in that volatility.
The potential for quick gains?
Exactly. But the risk of big losses is there too.
Right, for long-term investors.
I think they'd be much more cautious.
Yeah.
They'd want to dig deep into why the stock has fallen so far.
They'd want to see a clear path to recovery.
Absolutely. And remember, SAG doesn't currently pay dividends.
So that's another factor to consider?
It is, especially for investors looking for income.
So thinking about investor profiles, who might actually be interested in SAG right now?
Well, you've got your high-risk traders. They might be drawn to the volatility for short-term plays.
Open to ride those swings.
Right. But they need to be good at timing the market and comfortable with potential losses.
What about the long-term investors?
They'd be looking for signs of a turnaround, strong financials, a solid plan for the future.
And probably some evidence that the market is starting to regain confidence. Now let's rewind a bit back to the initial public offering.
The IPO.
SAG's IPO was priced at $8 a share back in October 2024.
Right.
It's trading significantly lower now. What could cause that kind of drop from the IPO price so quickly?
Well, there are a few possibilities. Maybe the initial valuation was just too high, expectations got ahead of reality, or maybe the market shifted, things changed in the automotive and industrial sectors.
Right, some unforeseen event.
Exactly. It could also be that the company hasn't performed as well as they projected.
Or maybe investors were disappointed with their progress.
It's possible sometimes broader economic downturns can really hit smaller, newer companies harder.
So they're more vulnerable to those shifts.
They can be.
Another thing we're seeing is that recent trading volume has been quite low.
Around 369,497 shares.
So how does that low trading volume affect the stock's price and how investors are feeling about it?
Low volume can actually make those price swings even more extreme.
Because each trade has a bigger impact.
Exactly, and it can signal a lack of interest from investors.
Which can further push the price down.
Right. If there aren't a lot of buyers out there, the price tends to drift lower.
And for investors who do want to get in or out,
it can be tricky to do so without affecting the price themselves.
So it adds another layer of complexity.
It does.
And finally, we can't forget the big picture here.
The macro environment.
Exactly. The automotive and industrial sectors are sensitive to the global economy and supply chain issues.
We've seen a lot of disruption in global supply chains.
Absolutely.
And that can have a ripple effect on companies like SAG.
Right.
Fluctuations in demand for vehicles, for industrial equipment, the cost of raw materials, all of these things can play a role.
And then there's the overall economic uncertainty,
which can definitely impact investor confidence.
So to sum up SAG Holdings, it's a company operating in a volatile market.
With a significant stock price decline.
Despite reporting revenue and net income, the technical indicators suggest continued downward pressure and that small market cap, it can amplify those price swings.
This is a really good example of how complex investing can be, especially with smaller, more volatile companies.
It highlights the importance of understanding your own risk tolerance, doing thorough research.
Absolutely, and considering both the company's specific factors and the broader economic context.
We hope this deep dive has given you a clearer understanding of SAG Holdings.
Based on the information you shared with us.
What other questions does this analysis raise for you? We encourage you to continue your research.
And keep these points in mind as you evaluate this potential investment.
If you found this analysis helpful, please subscribe, like, and comment on this episode.
We always appreciate your feedback.
And we look forward to exploring more investment topics with you.
Until next time.
See you then.
Take care.